All right, let's talk about this morning since there's a little bit of confusion, but that's all right. A little bit's better than a lot. It's difficult on days where things don't behave perfectly, right? To figure out what the heck you're looking at. And, today was one of those days we had sort of weird volume on a couple of these and some price action that came in late, didn't really give us the opportunity to get in. And then on Abbott, you had to figure out what the logical objective was going to be. So let's start with Abbott because I'm fairly certain that was something that a lot of people skipped or just didn't really want to fool with. So Abbott is up here in the red box, and Abbott is a trapdoor. So those of you who are just starting out, I mean, if you're just getting ready for boot camp number one, then you don't even know what a trapdoor is. So don't worry about this. The 1, 2, 3s are the ones you should be focusing on anyways. But in this case, for you guys who've been around the block here for the last 10 years or whatever, it's when you see a trapdoor set up like the one that we have on Abbott, the problem with it is that you get this big first bar, opens high, doesn't really close at the bottom, closes up in here. So that gives you're going to have to go and figure out the expansion ratio based on something other than the travel range of the entire bar. You could take just from, say, here down to the bottom, and from the close of the first bar down to the bottom of the first bar, that makes for a decent expansion ratio, and it would have got you out at a 150% expansion, I think. Or you could do what I did, which was look for where is the volume node, and then draw the expansion ratio down to the low. So I was looking at this guy out here as sort of a starting point for where I drew the ratio this morning. So I think I just redrew it because I don't know what chart it was on over here, but it's a little below this line is where it should have started. So let's redo that. Just get this thing looking the way that did this morning. So you'd be going from right below there down into the bottom of the bar. So again, I didn't exactly get it, but you can see what I'm trying to get at here. It's what was happening in the first bar. It was significant from here down to the bottom. It wasn't significant up in here because there is no, there's no significant volume going on up there. So you want to not use that in your calculation. So the temptation is just to draw the fib the way you always draw the fib. The reality is, you better make adjustments to figure out what's really happening. And then, Abbott came down, and it just hits that first target. So it was only about a 40-cent move to the first target, and it was still worth doing. And trying to push it further than it's really prepared to go is not in your best interest usually. So they're going to go where they go, as Connor used to say. Remember, he used to come into the boot camps when he was about 4 years old, 5 years old, and somebody said, Connor, are you going to be a trader? Do you know how to look at a chart? And he says, Daddy says, Connor, they go where they go. And that's really about the gist of it. You just got to figure out, what the measure is. And then if it's 40 cents, it's 40 cents. And you just got to take your 40 cents. And then, it had a reset where this is what I was talking about when I said, okay, now it's a 1, 2, 3. So that is a better setup for somebody who's newer to it, because now you've got a different kind of a dynamic going on here. So once you get and it's okay to use the second entries on these. Second entries are, I wouldn't take a third entry, but a second entry is as good as a first entry for the most part. But now you have to measure this again and figure out, where is the logical profit objective going to be? And remember, we were talking about, for those of you who were in Orlando, right? We were talking about opens, closes, highs, lows, and anytime there's an overlap between a couple of things, it says that's probably a good level to mark. And there's a little bit of frustration that some folks have sometimes. Bill and William and Eric are brought up at the boot camp last time. Well, but a 5-minute bar, isn't it arbitrary where the close of the high or the open and all that stuff is? I just don't feel that when I'm trading, right? A 5-minute bar sort of wraps up the price action really nicely, so I use them, and I think they work. So in this case, again, you have to look at it as the 1, 2, 3 setup gave us a 118, like 65 entry and a 118.35 target. And if that's all it's giving you, then that's what you're taking. You're not looking for, everybody wants a move back down into here because that's a bigger move, but you're dealing with reality and you're trying to peel these things off. You're trying to get the profits off the table when they're at a logical profit objective. So that's that one. Then, Church and Dwight have got up here, and this one is more just to show you, what a nice 1, 2, 3 looks like. It happened after the fact. So, 10 o'clock, we pulled the plug on these, and when it didn't trigger an entry from this threshold level here, which was, 105.18, 105, you probably get into this probably about 105.10 on the violation, give it a little bit of room down below there. Then it was off the table for me. But pretend that this is happening for the 10 a.m. mark. You got this pullback up to here. For me, I would move down into here. So I would not, if these start getting tight like this, I'm only going to give it probably one bar where the bottoms are tightening up, and then I say the pattern is just sort of falling apart, and I'm not gonna deal with it. But if this did happen like this, and it did happen during or before the 10 o'clock mark, then you start saying, okay, if I'm going to get in 105.40, where is the logical profit objective going to be on this? And I would say it's right here where this bump out is. So again, 104.71 is not down here. It ain't 103.81, but it's the place that I think price is going to get to first and have an inflection. And it did, right? It moved back up. Never would have stopped you out, would have not taken you out of break even or anything. And it did keep going, but that's not the point of the exercise. Really what you're trying to do is figure out where is the most likely place that it's going to catch an inflection. And if it catches an inflection right there, given that this was where all this volume was, what's the most likely thing that it's probably going to do after that? And this move is the most likely outcome that you get a repeat of that. This, much less likely, because history repeats itself, and it just had a very easy range of motion from that level up higher the first time. And again, what you're trying to do is just sort of figure out what's happening now. Doesn't matter because this one triggered after 10 a.m. So that's a non-issue for us. So now let's look at a long trade. So ESNT, this one gapped down and, climbed down into this bottom. So that's great, right? And if you're setting this one up, then you're saying the same thing. Okay, if I violate this bar here before 10 o'clock, which we didn't, right? That's just a good example again of, what a 1, 2, 3, or Nikki, you were asking, and again, it's valid, right? 1, 2, 3, 1, 2, 3, 4, 5, 1, 2. It's all a matter of these highs getting lower and this range on the bar tightening up. So you want to see these things get tighter as they go down, not have wide range bars that trigger you in. But this would have been a really good one. So 54.24 would have been the trigger for the entry. 55.17 would have been our target. And Eric was asking about stops on a lot of these things the other day, and that's a good question, is where are you going to put your stop? So if it's climbing up like this, the first place that I'm looking for a stop is going to be pretty wide. It'll be like this 53.71. As it climbs up above here, I'm going to ratchet up and just look over every few minutes and decide, okay, I'm going to pull it up a little bit, pull it up a little bit until I'm finally right around where I got into the thing. And then profit objective, it's out. And here's a good example of it got to the profit target and just reversed. We had Marvel, right? Marvell. This is an example of something that I did not take. I was not interested in anymore. And it's because of like this up in here. So when it starts to congest, when you start seeing this, yeah, the lows are a little bit higher, but they're all sort of starting to bunch up, and you get into this traffic jam instead of getting these nice, smooth, 1, 2, 3 moves. You want to see sort of a pointy place on a chart. So I've always said, look for the pointy spot and then figure out whether you've got the move you're looking for. And I don't really see this to have a pointy spot. What I see here is a flat top. And that's a different, you can set up sort of flat top trades. That was a friend of mine used to run the Fidelity desk on the floor. He had a pattern that he called flat tops that he would have the guys trade on the floor. But it's just not, for me, this is not as well defined a trade as the 1, 2, 3 setups that I want you looking for. Halo, same thing. So for me, this was a no-go because of what was happening here. So as it starts to sort of, hack back and forth and travel sideways, what you want to do is just go focus on something that's given a more defined climb. So, you want to see this low followed by a higher low. And maybe if that bar had been, opened here, closed up here, and then, the next bar maybe, opens, gets up a little bit higher. This is the kind of a climb that you want to see on these things. And then you would have had an entry up here, and you could have targeted this 54.90 thing. But that's why I didn't do Halo after I was watching it and really hoping for the first 15 minutes that we'd get a nice pop higher here. I would have still done it if like these two bars had done this sideways thing and then the next bar had been higher and maybe another one higher, because then you could have said, okay, these two bars, these lows form a support. So 54.90 is going to be my target. And if I get a move up into the range, then that's going to give me an opportunity there. So that's why we did wind up with that one. Abbott, I already talked about. You can see my mess over here on this chart of all the different things that I was looking at on Abbott, but the clean chart up there I think is a better one to look at and figure out what we're doing. BJ's was nice, but BJ's another one that took a little bit of figuring out this morning, and it was mostly because we started getting a wide spread and this happened. So when that happens, you don't want to have a fill on a bar that gaps higher intraday. And when they gap higher intraday, so you remember I was saying, well, spread a little wide for a $30 stock, spread a little wide for a $30 stock. And what happens is, here it ticks the bid and then it ticks the ask. And that's, almost a quarter point above the last bid. When it came back down and then tracked higher, it's a valid entry. And then as you're picking apart the first bar, yeah, you could have set your target at 35.08. I didn't think it was necessarily going to see that opening tick again because of all this junk over here. So I was targeting this, and that is because all this volume over here, right? This volume by price happened before this move was really ticking through. I mean, some of this stuff came in as we were going higher, but then the majority of it, when we were looking at the chart earlier, was already there from this. So when it traded down through here, it did it on all this volume. And I just think that when it gets back to that volume, you've got a very high probability that's going to wind up reversing and moving lower again. So in this case, 34.27 was the entry tick. You could have moved it up if you wanted to, right? If that gap was something that was sort of under your saddle, then you could have gone and said, let's get in here instead, because you had that big block print here. And when you get that out of sequence print, you get a block print, you get that gap and everything. Okay, well, 34.42, that's a valid entry as well. So if you go above that bar, I'm still going to say 34.84 was the winner. I don't care that it went to 35.08. There was a bunch of things going on that said that's the target. And, I know it's easy to get frustrated when things keep going after you're out, but that is the way that we played that one. And we've got team. So team, this one was a particular challenge because of the spreads. So you had to go and do you can see on that trapdoor setup, it went from way above through the trapdoor and then all the way down to a $2 target before popping back up and closing in the top of the bar. And that's because of the spread. So what you want to do is really evaluate where are you in terms of, what's going on. And even when you get into this bar here that filled, we got the 219 trigger, your fill was actually at 219.55, because what you want to look at, I think, what I look at is if I've got a 219 trigger on this thing, I can, and the spread's wide, I can definitely go and put my entry and say, if last price is 219, then sell short, stop limit, 218.80 or 218.90, depending on, what I'm thinking it's going to do. Stop, and then whatever my limit is. I think the better thing to do when the spreads are wide like this is say, if it ticks 219, and this is gonna send a couple of people into a tailspin here, because now you're going to get filled up in here somewhere instead of down in here. I say go in at the ask. If the spread's wide, don't give up the spread. So if it ticks 219, that could have been me on the entry. But what I'm going to do instead is say, get me in at the offer. And if I don't fill, I don't fill. I don't care, because I don't want to wind up getting stopped out on a big spread. So your entry order is, if last price is less than or equal to $219, then sell short, and you put in the ask as your stop price instead of putting that tick at the bar, or that tick at the line, or the tick below the line. And then what happens is, you get filled. In this case, you got filled 219.55, and your target 216.96 is your target, even though it managed to tick down to 215. Actually got down to about 215.40 or so, but 215.68 was really probably an easy fill. But it doesn't matter. I want to look at where's my target. My target's the low of this bar. And why is it the low of this bar? Because when it got down there, what happened the first time? First time down, it ticked in, and then it shot higher. My expectancy is, if I get filled up in here and I tick down to here, it's going to shoot higher. It didn't, and that's okay. I always tell people it's always okay to be wrong, just don't stay wrong. And it's in this case, it goes further. It doesn't matter. We got out already, so it's not going against us, and it's not it's not eating into the equity from the morning, but nice entry on a wide spread. The wide spreads scare the heck out of people sometimes. I don't really see it that way. So for me, the spreads are, you just got to learn how to work them. That's a matter of just screen time and being in front of this stuff enough. So for now, if that's uncomfortable, just avoid it and focus on the 1, 2, 3s. Those are the easy ones. Even if on a day, Fridays, I'm going to say we don't get a whole lot of triggers, and I don't know why, because the Friday should not make a difference in terms of that. And then we had Meta and Tesla this morning. These were right out of the gate. So we talked about this at the opening bell. I said Meta's up above and coming back down. So we had the actual levels on Meta. We had 569.50, which I had marked there, and then you had a 564.03 was your exit. So if you had these set up as orders, so I just like to get that top line in there, so you don't have to redraw everything every day. But if your top line triggers, then you can get your exit order in pretty quick. And that one ran the bands, so that's great. Tesla, I'm not going to pull from the other monitor. Let me just change the symbol here. Okay, Tesla was a little offbeat today. So we had an open that was below that 252.06 threshold. I'm going to get close here, but chart's kind of small. So 252.06. So 252.06 was our short sale entry. And, it opened, but in the pre-market, it was really indicated higher. So in the pre-market, it was trading all the way up into 253.10 pretty routinely. So that's why we said, okay, let it go and test the pivot. We're close enough to the pivot. Let's see if we get a pivot test that can get us into the trade. So first bar, second bar, ticks yen. And the second bar only made it down to 251.19. So, I just said you're going to want to scratch that trade if it comes back up again, because you're close to the profit target. It's coming back in. We know that the first bar had this really wide swing. So this is when, Eric was asking about when can you use the tight stops. I'll call them the Rick stops, right? Because Rick always had a 10-cent stop on it. You're not going to want a 10-cent stop on this, but you're going to want to stop up pretty tight. And when do you have to use a wide stop, and when do you just bag the wide stop? So a natural stop would be on Meta, because Meta opened and closed in that first bar, right? It never ticked very far above the entry price. This one, look at this swing, right? It's going all the way. It's doing $2 above the entry price before it ticks you in, makes it almost to the target. Just shut it back down again when it gets to that line. These you're going to have to actively trade right off the bell. You can't. This it's going to be very hard to automate these because of a big excursion like this. So you get a big bar. You can't really say, I'm just gonna put this out there as an automated trade, because it's very likely you're going to get a big swing and you have to manage it. And then, as it you start seeing sort of narrower travel range, more orderly trading. The order flow slowed down a little bit, and then it came down through. And, the next time that it comes down through, we get down to our 11 target. So 251.11. And then this one, well, somewhere around there, right? This one is where I was telling you, now you have to manage the trade, because we see that it's swinging, and it's swinging above. So when you want to go and take and look for a sweep of all the bands is when price starts close to the band and never has this big move. Tesla moved $2 in the other direction. The range on all the bands is only $3. So now you're looking for $5 from peak to trough. That's unlikely to happen versus when you have the typical setup and it opens close to where your entry price is. So it comes down through and gets down to this threshold level.
And it's 250.31.
And then 250.31 is the next one. And remember what I was saying, you're going to have to take these as they are on the plan. So there's a reason there's 3 bands on the plan. And it's because if it goes down, if you're getting these wide range bars, comes down through your first level, hits your target, keeps going, doesn't quite hit the second level, take it back off again, right? If you're trying to get the extension, just trail. So when I said trail 251.11, I meant trail 251.11. Just get it right where the exit is. And, it just takes you out in this sloppy trading. It just pulls right back into 251.11. Well, the reset is if it gets up above your 251.11, this should be an 11. So let me just do this so it doesn't confuse anybody. Okay, so it gets back above 251.11, comes back down through. When it gets down into that 250.31 from your plan, again, it's my lines aren't always precise when I'm trading these because they don't have to be. These are approximate. I mean, I'm eyeballing these things when I'm drawing the lines to begin with. So comes down and hits that next target. Comes up, gets above the line. This is not one that I'm getting because it only ticked above that line for a second. It's hard to see that, and you have to be looking at it constantly. But when it does this and pokes, way up above here, this is a much more logical entry. So now you see it's coming down, it's testing the top line, another one. And I said here again, right, we want to trail out at 251.11. This one, because of the stop being a stop market, actually closed you out up around 251.30. That's still okay. Right. So as I said in the room, we're going to be, 251.30 on this one. It's not because I was trying to change the profit objective. It was because when my stop got hit, it just popped higher on me, and those are market orders. They have a double header. So if you're looking through, if you're going through your boot camp stuff, then, well, I suspect you're not a double header yet. But this pattern, or if, we've got somebody from South Africa who's doing this in his version of, that's actually beat the street. So that's a kings and queens, because I did not, I did a version of the book that was in soccer jargon for the Italians, because I think the Italians would have murdered me if I didn't. But for the rest of the world, we just did this in around the horn as the baseball analogy, and then we did it as just sort of a generic. This is a kings and queens. That's a setup everybody's familiar with. Kings and queens setup, double header setup, and when that happens, we know there's a very high probability that it's going to make a move lower. So what are we going to target on the move lower? And again, I say you want to target this nearby objective. So 251.11. I mean, there's almost $1 every time it does it. So, you're not getting the $3 that the maximum range would be, but who cares? This is not frustrating. This is good. And it's nice when they run the bands. I know, everybody likes it. Eric likes it, Manny likes it, I like it, Bud like, everybody who's trading these things loves to see a big sweep of the bands because it feels good to get that whole range. But you can make the decision pretty early about whether or not you think it's likely that it's going to go and sweep through all the bands by what's going on in here. Look at your typical range during the day when the bands were created, because this would be it. Just remember, think about boot camp and where it is that you're sort of shifting gears and saying, yesterday's bands are not the ones I'm looking at anymore. Now I'm looking at a new set of things, and it's based on what's been happening today. And what's been happening today, we usually start focus on about 11:30, and those are narrower range bars. So if you're still dealing with the volatility from the open, you just need to look at this and objectively say, I know what I'd like to see, but I know what's in front of me. I know what is. So it's not about what you want, it's about what is. And if anything, if you're going to make any modification at all, which you could have done, is come in and said, all right, look. So Adrian had his band sort of down here in the sweep lower, but I see that there's another opportunity. You can get that plan and draw some additional bands. I see that there's another opportunity from yesterday's trading that would have added another threshold level based on this infield fly, which was followed by this big reversal move lower. And because it traveled back up there, it wasn't likely that it was going to travel back up there, but it did. Then from 253.28, I'm going to look at now, why didn't Adrian have this level on his plan? Oh, it's because of this central pivot. So when I was looking at this last night, I thought if it's coming down from here, problem for tomorrow, problem for Friday is it's gonna smack right into this central pivot. Central pivot tends to stall things, reverse things. In this case, it didn't. So if you were using that 253.28, or if you were using 252, 95, whatever this pivot line is here, I guess it's 252.95, then your first objective would have been 252.06. Your next objective, 251.11, and you outsmarted me, right? So you went and got the higher trade and still managed to do it within the bounds of the morning's volatility. So that's just a way to go and modify what's going on. I really don't think around an open with everything else that's going on that I'd want to do that real time, because I'm trying to figure out the chops. But if you did it yesterday, then what I would say is probably if you're drawing these lines, just draw this one so that it's different, so that you can identify what's a line that's been added versus, what's a line that you had yesterday from the plan. Okay, so hopefully that makes sense. So that's sort of the wrap up on what we did this morning and what I was talking about. We also had from the XRV trading plan. So now shift gears one more time. Let's just look at one more. ACGL. So you've got a stock here, and you're looking at much tighter parameters on entries and exits. So this is going to go, first off, where you draw your line doesn't mean anything. It's how you're going to set up a trade. So you're going to set up a trade based on 98.27. So 98.27, what we know is based on that low print from yesterday, what you want to look for is a 97.27 target. Doesn't matter where the heck you get filled, you want to set this up so that your entry and your target are set based on yesterday's low. You can if you want to do a 10-cent validation, you want to do a 50-cent validation, I don't care, but your target is going to be based on that low. So there should be 97.27. And then initially your stop, since you're setting these up as 1x1s, your stop is going to be 99.27. It's close enough for government work, as Jennings said. It's one of my favorites. I haven't heard that. I don't even know when I heard it, but long time. So this just set up a run in the background. So in the background, you've got to fill this thing. If you're watching this I guarantee you, you're going to mess this up. You're going to go and decide to get out because, oh my God, it's getting close to the stop. And, you know, if it wiggles back down in here again, boy, I'm just going to take that off. I'm going to save myself some money. And, oh, look, you know, it came back down through here. I got out. And then it comes down to here and you're like, oh, shoot. And then it goes down here to the profit target. And, oh my God, I'm an idiot. Right. And that's the psychological damage that you can do to yourself. What you want to do is just set these up so that they take care of themselves. And you know, if you look at the history of the XRV setups, they make money over time, and they make money set up just this way, where we're just letting things roll in the background. Like I don't want to be monitoring XRVs during the day. I don't want to be monitoring the around the horn trades during the day because I'm going to focus on the volatility bands. We're going to look at the stocks to watch, and we're going to look at the triple Qs and the NQs, and then we're going to look at the gaps and the possibility of the Apple trade off the open. That's plenty. Like I don't need more on my plate, and I definitely don't need to be micromanaging any one of these things. So I said it before, I say it again. The key to success with my stuff in particular is managing your workflow. So your workflow has to make sense. You have to be able to say, here's what I'm supposed to be doing right now. And that means in a lot of cases having an open Apple trade right off the opening bell that's doing whatever it's doing, and you can't watch it. You have to shift gears and focus on the next thing. Boom, I'm at the 5-minute mark. Doesn't matter what Apple's doing in the background. My involvement with it is just inconsequential to what's going to happen. Whether or not it goes to a target or a stop doesn't matter. Me watching it is just me wanting to see if I'm right. And this like insistence on being right all the time is taking you away from other opportunities. This is, I mean, I'm German, so it's as much part of the German folks as it is the American folks, but this like sports thing of winning and losing, and you know, winning is good and losing is bad, and it's bad. It's a very bad mentality to get into because it rivets you to the screen. It takes your attention away from what you're supposed to be looking at, and it makes you focus on something you did to find out if you were right or wrong. You can find out if you were right or wrong later. It's not gonna affect what Apple does. It's not going to affect what Meta does. It's not going to affect what Tesla's doing. If you've got textbook setups, just set them up and let them go. Work on the next thing. So there you go. That is the morning wrap. Hope that helps. Julie actually recorded it this time, so you guys can rewatch it. You know, as you're going through the Income Trading Academy materials, I think this stuff is good, just sort of to use as background and you know, just wrap your head around things and not focus so much on, you know, this very, very precise thing that people want. Look more at what's the gestalt of the whole thing. Okay. I'm going to take a break here in a little bit, get some more coffee, and then we'll come back and we'll set up our Magnificent Seven.